Welcome everyone to today's deep dive analysis of Applied Digital, a company that has recently been navigating a very complex and rapidly evolving market environment. In this discussion, we will explore the latest developments surrounding the company's financial strategy, its massive investment plans in the high-performance computing and AI infrastructure sector, and the technical indicators currently shaping investor sentiment. If you are interested in understanding how large technology infrastructure companies raise capital, manage expansion, and react to changing market conditions, this analysis will give you a clear and detailed overview. Let's start by looking at the most important recent development that has been driving volatility around the company's stock and shaping investor reactions across the market. The information presented in this content is for educational and informational purposes only and should not be considered financial, investment, or trading advice. All opinions expressed are based on publicly available information and market analysis at the time of writing, and they may change without notice as market conditions evolve. Investing in stocks, cryptocurrencies, or any financial assets involves significant risk, including the potential loss of your entire investment. Past performance does not guarantee future results, and viewers should always conduct their own research and due diligence before making any investment decisions. This content does not take into account your individual financial situation, risk tolerance, or investment objectives. You are strongly encouraged to consult with a qualified financial advisor or professional before making any financial or investment decisions. The creator of this content is not responsible for any financial losses or damages that may occur as a result of relying on the information provided in this video. Applied Digital has recently made headlines due to a significant shift in its financing strategy. The company announced a massive $2.15 billion debt offering executed through its subsidiary APLD ComputeCo 2 LLC. This financing move was officially priced on March 4th and is intended to fund the construction and expansion of a major new project known as the Polaris Forge 2 campus. This development is a key part of the company's broader strategy to establish itself as a major player in the high-performance computing and artificial intelligence data center industry. The scale of the financing is large even by infrastructure standards, which immediately drew attention from analysts and investors. On one hand, the offering ensures that the company has access to the capital necessary to build the advanced facilities required to support next-generation computing workloads. On the other hand, it introduces concerns about the company's increasing debt levels and the risks associated with aggressive expansion in a capital-intensive sector. Despite the cautious reaction from the market, the underlying growth story behind Applied Digital remains compelling. The company has been experiencing extremely strong revenue growth, driven largely by the explosive demand for high-performance computing resources and AI-focused data centers. Over the past year, Applied Digital reported a remarkable 250% year-over-year increase in revenue, reaching approximately $126.6 million. This level of growth demonstrates how rapidly the demand for advanced computing infrastructure is expanding as artificial intelligence, cloud computing, and machine learning applications continue to scale globally. Large technology companies and hyperscalers require enormous amounts of processing power, and specialized data centers designed for GPU-accelerated workloads have become one of the most valuable assets in the digital economy. Applied Digital has positioned itself to capture part of this growing demand by focusing on infrastructure designed specifically for high-performance workloads rather than traditional enterprise hosting environments. However, while the long-term growth narrative appears promising, the market's short-term reaction has been noticeably cautious. Investors often become wary when a company takes on large amounts of debt to finance expansion projects, particularly when the projects themselves require years to reach full operational capacity and generate consistent cash flow. The Polaris Forge 2 campus represents a major infrastructure investment, and large construction projects of this scale require substantial capital expenditure before any meaningful revenue can be realized. This dynamic creates a temporary period where expenses rise rapidly while returns remain delayed, which can pressure margins and create uncertainty for shareholders who are focused on near-term performance metrics. When we examine the stock's technical indicators, the overall picture currently leans toward a neutral to bearish outlook in the short to medium term. As of March 7, 2026, the stock is trading at approximately 28.8 cents, and several key technical signals indicate downward pressure. Many analysts who rely on technical models are currently classifying the stock under a strong sell consensus across multiple short-term horizons. One of the primary reasons for this sentiment is the relationship between the current share price and several important moving averages used by traders to evaluate momentum and trend direction. The 5-day moving average currently sits around 27.44 cents. The 50-day moving average is approximately $27.83, and the 200-day moving average is near $32.98. The fact that the current trading price remains below the longer-term 200-day moving average suggests that the broader trend is still facing downward pressure, which tends to make short-term traders cautious about entering new positions. Another important technical indicator is the Relative Strength Index, commonly known as RSI. This indicator helps investors determine whether a stock is overbought or oversold based on recent price movements. At the moment, Applied Digital's RSI is sitting at approximately 45.78. This value places the stock in a neutral zone, meaning it is neither heavily overbought nor deeply oversold. In practical terms, this indicates that the market has not yet reached an extreme level of optimism or pessimism. Instead, it reflects a period of indecision in which investors are waiting for additional signals before committing strongly in either direction. The Moving Average Convergence-Divergence Indicator, widely known as MACD, adds another layer of analysis to the technical outlook. Currently, the MACD value remains in negative territory at approximately negative 0.197. This reading suggests that the bearish momentum has not yet fully reversed. When MACD remains below the signal line and below zero, it often confirms that downward pressure continues to dominate the short-term trend. Traders who follow momentum indicators closely often wait for a clear MACD crossover into positive territory before considering bullish positions, and until that occurs, many investors remain cautious. Outside of traditional market analysis, social media platforms and online investor communities have also been actively discussing Applied Digital's recent developments. Sentiment across these platforms appears deeply divided. Bullish investors are focusing on the company's long-term growth potential and several major strategic milestones that could drive future revenue expansion. One of the most important highlights, frequently mentioned by optimistic investors, is the company's massive 15-year revenue lease agreement valued at approximately $5 billion with a major hyperscale client. Long-term contracts of this size can provide stable cash flow and strengthen investor confidence in the sustainability of infrastructure investments. Another major milestone fueling bullish sentiment is the recent groundbreaking of the Delta Forge 1 campus, which is expected to deliver around 430 megawatts of computing capacity. Large-scale facilities of this magnitude are designed to host advanced GPU clusters and AI-driven workloads, making them highly attractive to technology companies that require massive processing power. For investors who believe in the long-term expansion of artificial intelligence infrastructure, projects like Delta Forge represent the foundation of a rapidly growing digital ecosystem. On the other side of the debate, bearish investors are raising several concerns about the company's financial structure and valuation. One commonly discussed issue is the company's compressed gross margin, which currently sits around 13%. For infrastructure businesses that require large capital investments, maintaining strong margins can be challenging, especially during periods of aggressive expansion. Some analysts argue that until margins improve, the company's profitability may remain under pressure even as revenue continues to grow. Another point of criticism relates to the company's valuation metrics. Some skeptics believe that Applied Digital is currently trading at a price-to-sales ratio more commonly associated with software companies rather than infrastructure providers. Software businesses typically command higher valuations because they operate with lower capital requirements and higher profit margins. In contrast, data center and infrastructure companies often trade at lower multiples due to their significant operational costs and long development cycles. This mismatch between valuation and business model is one of the reasons some investors remain cautious about the stock's short-term prospects. From a technical trading perspective, several key support and resistance levels are now being closely monitored by analysts. The immediate support zone for the stock currently appears to lie within the 2671 to 2711 range. Support levels represent price areas where buyers historically step in to prevent further declines. If the stock manages to hold within this range, it may stabilize and potentially form a base for future recovery. However, if the price breaks below this support zone with strong selling pressure, technical traders warn that the next potential downside target could fall closer to the 24 level. Because of this uncertainty, many analysts are recommending a strategy of high vigilance for investors who are currently holding the stock. Monitoring key operational milestones will be crucial in determining whether the company can successfully execute its long-term growth strategy. In particular, investors are paying close attention to the integration of the company's new GPU platform known as Chronoscale. This platform is expected to enhance the efficiency and performance of the company's high-performance computing infrastructure, making it more attractive to large enterprise clients and AI developers. Equally important is the continued development and construction progress of the Polaris Forge facilities. Large infrastructure projects often face logistical challenges, regulatory requirements, and cost management issues. Successfully completing these projects on schedule and within budget will be essential for maintaining investor confidence and demonstrating that the company's aggressive expansion strategy can translate into long-term financial performance. For potential new investors who are considering entering the stock, many analysts suggest waiting for clearer confirmation signals before taking a position. One possible approach involves watching for a decisive breakout above the $30 resistance level. A strong move above this price point could signal renewed bullish momentum and attract additional institutional investors. Another strategy involves waiting for technical oscillators such as the RSI and MACD to shift into more positive territory, which would indicate that the bearish momentum has weakened and that a potential trend reversal may be underway. Until such signals appear, some traders warn about the risk of what is often referred to as a momentum trap. This occurs when investors buy into a temporary price rebound that ultimately fails to sustain itself, leading to further declines shortly afterward. By waiting for stronger confirmation signals, investors can potentially reduce the risk associated with entering the market during periods of uncertainty. In conclusion, Applied Digital Corporation currently stands at a fascinating crossroads between long-term opportunity and short-term market caution. The company is aggressively positioning itself within one of the fastest-growing sectors of the global technology industry: high-performance computing and artificial intelligence infrastructure. Its ambitious projects, large-scale financing initiatives, and major client agreements suggest that management is betting heavily on the continued expansion of AI-driven computing demand. At the same time, the market remains cautious due to the significant capital requirements, rising debt levels, and technical indicators that currently lean toward a bearish short-term outlook. For investors, this creates a scenario where careful monitoring, disciplined risk management, and patience may be essential while waiting for stronger signals of stability or renewed momentum. Thank you for watching and spending your time with this detailed analysis. If you found this breakdown helpful and want to see more in-depth market insights, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss future updates.